You've got a real unique view of the world, I think, because you spend about half the time looking at U.S.-based companies, and then the other half the time looking in Asia and China specifically. So we've got a lot to talk about.
Yeah, big world.
Let's start with just your background. Kind of what did you do before you were investing in crypto?
Yeah, so I'm the managing and founding partner of Dragonfly Capital. We're a global crypto venture firm. I'm based in San Francisco. My partners are based in Beijing, and we try to cover the world. So before that, I've been a VC for about 5 or 6 years. I got started at a fintech fund in Hong Kong around 2014. Before that, I was actually a college professor in Hong Kong. And basically, this was early days for crypto, and Hong Kong has a very sleepy startup ecosystem. But at the time, quite a huge Bitcoin, it wasn't crypto then, it was just Bitcoin ecosystem. A lot of like libertarians and finance people like that in Hong Kong. So I sort of got into the ecosystem there, and I became the crypto guy. And then I moved to Angelus, which is where we first met each other, actually, and I was a partner there. And then I joined Bain Capital Ventures, which is the venture arm of the 100 billion, AUM asset management firm. And I did a lot of seed investing and specifically sort of kickstarted their crypto investing program, and left that 2 years ago, started Dragonfly, and we've been rock and rolling ever since.
Awesome. And then what's the mandate with Dragonfly?
Yeah, we're a generalist crypto fund. I think it's tough. A lot of our LPs, they just want sort of single exposure to crypto, right? And they don't know whether it's tokens, whether it's equity, and even for us, whether it's US-based or Asia-based, because our main thesis really with our fund is that a crypto, very unique amongst all asset classes and even all tech trends, is truly global from day one. Mm-hmm. So we sort of give them that diversified exposure around the world. Maybe about half of our investments end up being in tokens. Could be liquid, it could be illiquid, things like SaaS. We do a ton of DeFi protocols and smart contract platforms and money protocols. And then about half of the investments are in infrastructure, venture, very traditional venture investments. Many of those tend to be in Asia, in fact.
Got it. And so maybe give us a breakdown of like what are some of those companies that you've actually invested in, and then I want to get into kind of a spirited debate about DeFi, ETH is money, etc.
Totally. I love talking to more. Do you call yourself a Bitcoin maximalist at this
point?
Not at all. Really?
Not at all. No,
okay.
No, not at all.
Okay, great. This will be good then. Yeah. So some of our sort of bigger investments we led MakerDAO's last round, which is the largest DeFi project and the largest decentralized stablecoin, and we specifically helped them with their go-to-market in Asia. And then we've invested in a whole bunch of other DeFi protocols like Compound Finance, DYDX. These are like money markets and decentralized derivative exchanges. We're investors in Ethereum and Bitcoin too, of course, as well as on the infrastructure side. We're in deals like a lot of U.S. infrastructure like ErisX and Tagomi and Anchorage, and a lot of their sort of equivalents in Asia, like a brokerage called Amber AI, which is growing like crazy. Whole lot of sort of exchanges, just the entire sort of market infrastructure stack that's growing in Asia.
And why the focus on Asia, or kind of give us an understanding of like what's actually going on there for the US-based investor or Western world? Like what do we not understand, or what should we understand about that market?
Yeah, so one of the biggest misconceptions about crypto is that it's happening in the US to any extent, really, which is totally different. I understand why, because it's totally different from the internet and even biotech and SaaS. Basically, if you're an internet company, you don't think about China, you don't think about Asia at all, because the US market is so large, you have so many users here, that you really don't have to have a China strategy until you're at a 10 billion plus market cap. There's plenty of room to grow. In crypto, that's not true. Crypto, and this actually is sort of my origin story, when I was in the US, I really didn't like Bitcoin. I'm not sort of like a anti-Fed guy. I think the US dollar is one of the greatest sort of technological and institutional inventions of all time. It creates stability and so forth. And so compared to sort of the US financial system, Bitcoin and the crypto financial system is not very great. So if you're an American, really the main use case of crypto today is just sort of like the Robinhood use case. It's just speculation. Whereas when I went to Asia and was a fintech investor, I saw that these were real users of crypto that desperately need it. The financial system is completely, significantly lacking compared to sort of the Western financial system. There's, the largest groups of underbanked and unbanked are in Asia, China and India. But even people like middle-class people and so forth, and people that have smartphones, there's no credit system. It's very hard if you're an SMB to get credit. It's very hard for individuals to get credit. Of course, all of these currencies, they're often under capital controls, and they're much more volatile than the US dollar. So crypto is a great use case for them. And this is empirically true, too. If you look, we pulled the numbers. Basically, there's 16 crypto unicorns, like venture companies, and 12 of them are based in Asia. So 75% of all the crypto unicorns are in Asia. And I mean, they have like 5 billion plus revenues, multi-billion dollars in profits, all coming from this region.
It's crazy how large it is. Is this institutions? Is this retail? Like, where is that actually coming from? That right? I hear you on, hey, the people need this, but those numbers are just so large. Can it be all retail?
I think it's primarily retail. Generally in China, institutions as a concept of as a class of investor are more of a Western phenomenon, because you kind of have to, it's sort of from endowments, it's from like 100+ year, like families make their money in, the Gilded Age, and they pass it on, and there's institutions. Whereas in China and most of Asia, the money is more recent. Mm-hmm. So, most institutional money is just family offices, is just like public companies that are run by specific families. But yeah, generally most of the activity in crypto in Asia is retail. Yeah, there's grannies, that are buying EOS and are buying Bitcoin. There is actually a significant amount of the mining industry is probably institutions, because it's a little harder to buy significant amounts of crypto, like 10 million plus amounts of Bitcoin in most Asian countries than in the US. So, one reason why the hash rate is so large in China, it's like 65% of the entire hash rate is in China. It's actually not because energy costs are so low. It's because it's a way for institutions to get really significant amounts of coin and sort of virgin coins in one go.
Got it. And so as you guys have started to invest, the teams that you're backing in the Asian market, are these kind of teams that are native to the Asian market? Do you see teams from other parts of the world kind of moving there to service this need? Kind of talk to me about the teams and what you found as you've started to invest more and more in the region.
Yeah, usually it's people who at least grew up in these countries. It's very, very, look at Uber or Facebook. It's very, very hard for Westerners to penetrate China, less so India, but India's actually they just had a major Supreme Court ruling in India just yesterday. So it was sort of banned before that. But the other trend that's driving a lot of innovation to Asia is regulatory flexibility. The countries there are just much more flexible with what you can do with crypto. They sort of take a wait-and-see approach and sandbox approach as opposed to U.S. regulators. And so what we've been seeing, the main trend we've been seeing is that typically everyone flocks to Silicon Valley. Like YC is like the new American dream. Like, over half of the YC class is international, and it's people from India and China and Singapore and so forth. And that's stopped happening in crypto, really. So what we're seeing now is like, it used to be that everyone in tech, like, wants to do a tech startup would immigrate to the US. Now they're just sort of staying home, or they're immigrating to Asia instead. I think maybe if the regulatory disparity continues to grow, we will start to see an actual migration of Americans moving to like Singapore or Hong Kong. That would be pretty unprecedented, to be honest, but we'll see.
Yeah, and so then walk me through kind of, you guys have a big focus on DeFi. What's the thesis there, and kind of why are you guys so focused on that specific part of crypto?
Yeah, I think DeFi is a great encapsulation of, it's a great example of this story of like why so much of the adoption is in Asia. Broadly, I think sort of my thesis on crypto is that the very early use case, it's a protocol for value, and the very simplest, least computationally heavy form of value is just money, like Bitcoin, right? It's just a line in a database. Very simple. You don't need massive scalability. to make it happen. And then the other major applications of like Internet of Value is the entire financial system. So once you have money, you can make programmable money, and you can make sort of smart contract platforms. And once you have smart contract platforms, you can do all sorts of things with value. You can do ICOs, which is sort of like fundraising. And you can do decentralized lending, which is like MakerDAO. And you can do decentralized lending that collateral, you could use assets as collateral to basically create an entire financial ecosystem. Because today the major actually innovation of the financial innovation of the 19th and 18th century, which sort of catalyzed the Industrial Revolution, was this switch to basically turning property into capital. Mm-hmm. So before, in like the 15th century, if you owned a house, you couldn't do anything with that house. It was just idle capital just sitting there. And then you had property systems, you had municipal record keeping, you had this banking industry that allowed you to mortgage your house. And so it was easier to buy a house, and you could take loans on it, and you could use that to start a business or whatever you like. And so capital that's just sitting idle under your bed, very little of the money in the world is just sitting idle. Most of it has to be used to create a financial system of derivatives and lending that's 100 to 1,000 times larger than the actual base money supply or gold, whatever. Collateral supply. And so I think that's what's happening with DeFi. DeFi is basically that happening in a fully decentralized way. Mm-hmm. So you have decentralized lending, and it has most of the benefits. It's still early, but it has most of the benefits of cryptocurrencies, which is permissionless, censorship resistant, things like that. Anyone around the world can use it, global from day one. And that's big. That's big. Again, it's not big for Americans because pretty much everyone in America can just get a credit card, and it's probably too easy, to be honest, to get like a personal loan in America, mm-hmm. but very hard in the rest of the world. So the ability to just instantly, without knowing who you are, get a loan with putting in ETH as collateral today is really powerful in many parts of the world.
And so if we are able to onboard all of these, quote unquote, new users to a financial system, it happens to be this new financial system, to me the most interesting part is the tertiary effects of that, right? If all of a sudden now people have access to credit, they have access to all sorts of different financial services that have previously been available in the developed world, but not in many other regions, you can really kind of propel forward human production and human development to some degree. And I just don't think we've seen anything like this before at this scale this quickly. Do you agree or disagree with that?
Yeah, I mean, it's remarkable. You can read a book of financial history over the last 5,000 years, and you can trace like every 1,000 years was a major financial innovation. Like, 4,000 years ago we invented debt, and then we invented gold and other precious. I mean, not invented, but we sort of did. We invented gold as a precious metal that became like a financial asset, and then we invented sort of a payment system that is on top of gold. And then in the 15th century, we invented like joint stock corporations and a way to, sort of organize organizations and fundraise for them. And then we had stock exchanges, and then we had massive derivatives markets. And it takes 4,000 years. And in crypto, we've literally built that in 10 years. Mm-hmm. So it's just like this hyper fast growth of a totally parallel, decentralized at this point financial stack. Technology is great. I mean, the leverage afforded to everything being open source, everything being, open APIs and so forth in crypto, the fact that it's all software leads to just tremendously fast innovation. And I think we're getting to the point in a few years where it's going to be totally new. Right now we're like rebuilding existing institutions. MakerDAO is kind of like a decentralized central bank in one way. In another way, it's kind of like a decentralized pawn shop. But the most exciting things in a new technology innovation are when you get like totally new use cases that are not even sort of mirror images of what's it's when you get cars instead of just horse and buggies or whatever that are a little faster.
Yeah. Let's go right at it. ETH is money. This is a meme that has become very popular, especially in the Ethereum DeFi community, and really the way that I've analyze this or kind of evaluated it is basically what ETH is money is saying is ETH is good money, right? Because if we don't say ETH is good money, then I could say rocks are money, Cheetos are money, etc. But ETH is good money. is really going at this idea of kind of what you talked about, like collateral, right? And in these DeFi systems, we're seeing Ether specifically being used for certain mechanisms or products and features, etc. Let's just start with agree or disagree ETH is money.
Well, I would say, I think the sort of meme on Twitter is that ETH would like to be money. I don't think anything in crypto is money yet. I don't think Bitcoin is money. And in fact, I think MakerDAO, DAI, the stablecoin, is probably the closest thing to money in anything in crypto. But
the market
the
market would disagree with that, meaning that Bitcoin, from a transaction standpoint, the on-chain adjusted transaction volume of Bitcoin last year was just under $1 trillion, right?
Yeah, totally.
And so Maker, I don't know what DAI specifically is. It's not zero. It's definitely popular. It's like 60%, I think, of the value locked in DeFi is DAI, and so that's a real amount, right? That's not anything to kind of thumb your nose at. But at the same time, we're talking about, I think there's $1 billion locked in DeFi, right? So let's call it somewhere in the hundreds of millions of dollars versus hundreds of billions of dollars for Bitcoin. I don't think anything's even close to Bitcoin, but I will say that I've got a strong opinion that's loosely held. So hopefully, for your sake, you can convince me differently. But that's just kind of the way I think about it. Is like the market almost doesn't care about our opinions, and if you look at the data, the market's determined Bitcoin to be more of money than anything else. What do you think about that? Agree, disagree?
Well, I think they're all striving to be monetary assets, right? And so
the cryptocurrencies, not anything else, just the ones that want to be currencies. That's what they're striving to be.
Pretty much all of them. I think everything in crypto is locked in a battle to be a monetary asset, with the exception of maybe some of these, like buy and burn sort of dividend kind of tokens, like MakerDAO. It's that Maker has a token that basically accrues value from DAI going up. It's called MKR, and they have DAI. So maybe MKR isn't trying to be money, but DAI is trying to be money, ETH is trying to be money, Tron is trying to be money, and they're all on a spectrum.
Tron?
Everything.
All right, go ahead.
Shoot your shot, do your thing.
Shoot your shot.
Everyone's shooting to be money. I mean, that's the innovation, right? Like, This is the cool thing about crypto, which is why it's so exciting. We came from the internet. My partner, too, he's a very famous VC in China who was one of the first VCs in the internet. The thing that's exciting about crypto is that it's permissionless innovation. And it used to be, like, no one could create their own TV network. That was just unbelievably, like, nobody thought that was possible. Look at us now today, right? Look, Ma, we did it. It used to be, you think, nobody could create your own money. It's insane. It's the province of 200 governments, even really more like 20. Now anyone can create their own money. Good luck. It's not that easy. But certainly ETH is trying to be money. Bitcoin is trying to be money. They're still very far away from it. I think the market cap is just a sign that, like, it's the most valued digital asset, right? But an asset is different than money. I mean, it's not used every day as a means of exchange and so forth. Nothing really is. We shouldn't kid ourselves about that. If anything, Tether is probably the most used as a medium of exchange asset in all of crypto. I don't know if it's a strong store of value as Bitcoin. The amount of turnover in Tether is incredibly high. But, like, so from the way economists think about it, the three things of aspects of money. In one sense, Bitcoin is much higher as a store of value. In another sense, DAI and Tether actually might be higher as a medium of exchange today.
So my big argument this week was that ETH is no different than a fiat currency.
Yeah.
Now,
that was controversial.
And that's fine, right? I have no problem having different thoughts than people, but the one thing to clarify here is I'm going to guess 50% of people who are yelling and screaming on the internet didn't read the article, which is like a problem in society in general. That's not a crypto thing. That's just like politics, social, culture, all this kind of stuff. But what I said in the article was the monetary policy of ETH makes it no different than a fiat currency, right? Meaning that there's essentially groups of people who make decisions on the monetary policy of the asset periodically. Now, what I will say is a positive for the ETH is money crowd is that every time that they have made the decision, they have made it in what many people would consider the quote-unquote right direction, right? Meaning that they have decreased the supply of money. And so that is good in the sense of they're not going the opposite direction like a true fiat currency would. But structurally, the fact that this group of people can make that decision and it could go up or down, it's not kind of pre-programmatically decided, in my opinion, makes it no different than a fiat currency. Agree, disagree, think I'm an idiot?
Yeah, disagree.
Disagree. All right.
The reason
well, at
is
least you didn't
because
think I was an idiot, so that's a start.
I read the article too. I did
right.
read it, and I didn't trash talk you on Twitter. Yeah, no. So disagree because I think, certainly Bitcoin is ahead in that it has the most decentralized and sort of stable social consensus around its monetary policy. That's amazing. That's the best thing about Bitcoin today, probably by far. It's not leading in like technology or scalability or privacy, but it's got maybe arguably the most important thing, which is sort of this inbuilt scarcity. It's hard to fork that out. The problem with that, though, is, and this becomes a bigger problem with sort of new consensus protocols and so forth, is ultimately these networks have to be secure, right? And the monetary policy is the security of the network, right? And there's the biggest way that Bitcoin could fail today is basically Bitcoin is secured by two sort of cash flows, the security of it by mining. So the first is by block rewards, and the second is by a small fee that everyone pays to miners when they make a transaction. And a lot of the sort of simulations today of what happens if there's no block rewards, if it's zero, and if it's all just transaction fees, is that there will be serious security risks, and it'll be much easier to attack the network, and it'll be less stable. So,
just interrupt for a second. To be clear, that's expectations or predictions of what's going to happen in 100 years, 120 years, right? 2,140.
More like 20 or 30.
Oh,
That's the way the halving is going.
2,140 is when the last Bitcoin will be mined, right? Give or take.
Yeah, but it gets progressively. I mean, as you get down to 3%, 2%, 1%, where are we now? 2.5 or something?
Right? I don't know. Yeah, something.
I mean, the lower it goes, the sort of exponentially more difficult it gets. And in fact, my colleagues, we have like a fairly large research arm. We did an analysis of how this relates to DeFi. And in fact, if you have this issue where if the lending rate, if basically the risk-free rate of lending out Bitcoin or Ethereum becomes significantly greater than the mining. This is actually a much bigger issue for proof of stake because you don't have to like buy mining equipment, and it's just a decision of whether you stake your asset or you lend your asset out. It leads to disastrous consequences because people won't stake and they'll mine and they'll lend it out instead. Actually, so that's not as applicable to Bitcoin, but it is applicable to Ethereum and any other proof of stake asset. So like I understand why Ethereum is doing this. They have to understand that, and they do understand that, especially if they move to proof of stake and new alternative mechanisms, the monetary policy has to be flexible for security reasons. I mean, what's going to happen if Bitcoin, even 20, 30 years from now, is like insecure and it's like easy to attack? Will the sort of social consensus of scarcity and the fixed monetary policy kill it? I don't know. I mean, that'll be a major decision for the Bitcoin community.
For sure. So going back to the idea that ETH is money, right, and it's no different than a fiat currency, why do you believe it is different than the fiat currency, right? And really my thought process was when you outline how is the monetary policy decisions and structure of a fiat currency decided, ETH looks very, very similar to me.
Yeah, I think we're all on a spectrum with fiat currencies because we're all creating our own central banks here. The main innovation in crypto, where anyone can create their central bank, is crypto is all about incentives. So the problem of central banking, the fundamental problem is there's two goals that the Fed and all Feds try to hit. One, reduce inflation to create a stable currency that increases economic output and so forth. But two, reduce unemployment. And those two things, and then also the third is that's sort of secret, but is also important, and is sort of tied to the second, is you get access to seniorage, and you get to basically you get an unlimited amount of spending if you're the government. You could sort of print your way to freedom, at least for a few years in the short term. And these trade-offs.
Don't tell them that.
They know, you know.
Well, they
I mean,
know.
look at Trump's tweets. Look at how Powell is reacting to Trump's. Like Powell was much more conservative before he became the Fed chair than after. It's sort of inevitable. Like we try to create these mechanisms of church and state to separate the central bank from the government, and often they work for a few decades, but no currency has remained stable for more than 100 years. So these basically, this is an incentive problem. Like these three things conflict with each other all the time. And governments have every incentive to sacrifice inflation to juice unemployment or to spend more money, especially in election years, right? But Bitcoin and Ethereum don't have that. Okay, there's no like concept of unemployment rates that need to, if like your monetary policy goes up and down. And it's miners that get the seigniorage, and the miners today don't really have much influence or say in the sort of social consensus of making these monetary policies. So in that sense, ETH is a great improvement. Really, the only thing ETH today is sort of the only lever, the decision that is affecting their monetary policy is one, everyone wants to be lower, and then two is security. And that's cool. I think the trade-off between we're incentive to increase security of the network in this cryptographic way. That's a much cooler trade-off than we're incentivized to juice the economy whenever there's an election year. That's still a quantum leap ahead of all other fiat currencies.
Yeah, so just so people understand, Ethereum is obviously the network. There's Ether, the asset, and the monetary policy of Ether is something called a minimum issuance. And the minimum issuance is basically, is it every year? How often is the decision made?
I don't know.
Okay, so periodically they basically make a decision as to the rate of issuance that will occur until the next decision.
Yeah.
And so again, kind of a positive argument for ETH is that they have decreased that every time. So it has acted similar to Bitcoin in that the Bitcoin halving.
Yeah.
The two fundamental issues that I have is, so fiat currencies, I basically outlaid three things. I said there's no fixed supply, there's an inflationary supply schedule, and the monetary policy decisions are decided by a group of people, right? Mm-hmm. So no fixed supply, inflationary monetary schedule, and the decision as to that rate is decided by a group of people. If you look at ETH, there's no fixed supply, it has an inflationary monetary supply or a schedule, and it is decided by a group of people. Now, when you use that framework, which is a framework that in full transparency I made up, right? Then
it's pretty good. I like it.
Then you can apply it to ETH and fiat, and they look exactly the same.
Yeah.
In comparison, if you were to put Bitcoin into that, you would say that Bitcoin has a fixed supply, so it doesn't meet that first criteria. Now, it has a disinflationary supply schedule, meaning that there is an additional increase in supply every year or every day, etc. It is programmatically declining in time. Ethereum has done the exact same thing. So it's been disinflationary over time, but the difference is that Bitcoin is programmed to continue to be disinflationary. Ethereum could step in and say, hey, there's security concerns, and so therefore we are actually going to increase the rate rather than decrease it. And then the third is that the monetary policy decisions are decided by a small group of individuals. A big difference between Bitcoin and Ethereum, for example, is that there is a preset monetary policy with Bitcoin that is programmatic, and there is the possibility that people could come together with majority and change that monetary policy, right? That's kind of the social consensus you're talking about, etc. The difference is with Ethereum, that is not a preset programmatic monetary policy, right? And so there's kind of these periodic decisions that need to be made. Now, one, am I absolutely crazy for kind of evaluating it this way and using that framework? Or how do you kind of think through that framework as what's good, what's bad, and kind of what did I miss?
No, I think it's good. I think the thing you're missing a little bit is that it's all a spectrum. There are people at the end of everything. It's turtles all the way down. So Bitcoin is clearly optimizing for being as little controlled by people as possible. This is like Nick Szabo, sort of inventor of smart contracts, is this concept of like there's dry and like wet code, and wet code is messy and involves people and lawyers and so forth. Dry code is automated, and automation of decision making is it's like the bedrock of capitalism and our industrial engine. So it's great if you sort of automate away the decision making about how you change the monetary policy. If that's what you're optimizing for, if that's what you think is the best thing that creates the best money supply or the best store of value. I think that's possibly the case, probably. But Ethereum is optimizing for other things, which is that Ethereum is fast moving relatively. I mean, it's taken a long time for ETH 2.0 to come, but it's fast moving, it's dynamic, it's the other things that make something a good digital asset, money supply, like having built-in privacy or having scalability, whether at the layer 1 or layer 2, having programmability, like being able to allow a decentralized financial ecosystem to exist natively in a trustless way, tied to your currency and in your ecosystem, is very powerful. It's why, almost all of the collateral behind decentralized finance is ETH. It's not Bitcoin yet, because it's hard to do in a trustless way. So those things could make something a better money in a way, and having your monetary policy be decided by a group of people and be more flexible is a requirement if you want to optimize for that fast, for moving fast and being dynamic. So it's trade-offs, right? Clearly the market today values that the Bitcoin trade-off is the best. But actually, like you and I, we're pretty sure like the crypto ecosystem will be in the trillions in the next 10 to whatever, how long it takes. So actually the market is really telling us that the real solution has not been found. Like there's something missing, like you could kind of think of it like 5 trillion is like at max capacity maybe, right? Like when crypto becomes a true store of value. So Bitcoin is what, 200 billion? So it's like a 4% chance, or no, sorry, 40% chance, wait, hold on.
4.
Yeah, 4% chance that it becomes that the Bitcoin of today is the store of value of the future, right? That leaves a lot of room open.
But you could also flip that and say Bitcoin's dominance is at 65%, and therefore the market determines there's a 65% chance that Bitcoin is the winner. Right, out of all of the options today, there's a 65% chance that Bitcoin is the winner versus everybody else.
Yeah, but I mean, that's not the real. It's like the real market size of crypto isn't what crypto is today. It's gold. Like most people still think it's gold, right?
Okay.
Yeah, like 90% of the people still think it's gold.
Yep.
So
call it 7 trillion or so.
Yeah, right. So, but yeah, Bitcoin's in the lead, clearly. The market determines these things.
So here's my other argument, is that, and to be very clear with folks, I am actually a fan of what Ethereum empowers people to do. Mm-hmm. There's a lot of innovation that's going on, a lot of experimentation. I think that stuff is super important to kind of the health of an entire ecosystem, right? I am not, and when you ask about the maximalism, I am not of the belief that Bitcoin is the only thing that will ever be valuable, period, in this entire world, mainly because I come at it from the sense of the entire financial system is going to get rebuilt in parallel, and therefore it would be like saying, the U.S. dollar is the only thing in the financial system. No, there's credit, there's all assets, there's all kinds of other stuff that goes on.
So and they're mutually reinforcing.
Yeah, exactly. And they make the dollar more important, more valuable, etc. Right?
Yeah, because we have such an advanced financial system.
So if you think of the dollar as that base unit of account, I believe personally that Bitcoin will be the base unit of account of this future world. There'll be all kinds of other stuff that are built, but Bitcoin, because it's that base unit of account as money, it ends up being the most important, right? Because it's kind of the foundation, but there's a bunch of other stuff that is important that gets built. Ethereum today is helping to empower some of that to be built. And let's take the DeFi sector, for example. When you have decentralized financial products, you need to have some form of money, right, that is used in these products. Mm-hmm. The difference here is that while some people are using ETH, the most popular one in the Ethereum ecosystem is not ETH. It's actually DAI, right? And DAI is an ERC20 token, and kind of you get through the whole thing, but it is fundamentally different. On top of that, what you're seeing is teams work to bring Bitcoin and its monetary policy properties to Ethereum with TBTC, etc. And so, again, I go back, like, my opinion doesn't matter, your opinion doesn't matter. Frankly, the market's opinion is what matters. And the market is determining that in even just the DeFi world, there is something better than ETH as money, right? Meaning DAI. And also, there are teams that are going out to search, how do we bring the monetary policies of Bitcoin to this ecosystem?
Totally.
Let's stop there for a second. Agree, disagree, is that the right way to look at it? Do you look at it a different way? Just walk me through that type of the analysis.
No, totally. It's I think I would reframe DAI as money, not ETH as money. ETH is collateral, ETH is gold. Gold is not money. It's been many years since anyone's used gold as money, so which is fine. Like
don't tell Peter Schiff. Go ahead.
But again, like I like the dollar. I like stability. I think the greatest crypto is about financial access, really. And the most wanted financial asset around the world is the dollar. I mean, you have these stats where like 90% or like some massive percent of all $100 bills or all bills in general is outside the US. Like it's just so many percentage of countries are fully dollarized at this point. So just bringing the dollar to the world and bringing sort of the Fed's central banking policies to the world, that I think is where the next stage of growth in crypto is happening. Absolutely, I don't think there's any doubt about that in my mind. So I'm sort of a stablecoin maximalist in a way when it comes to what is money. I think stablecoins will be money, at least for the next few decades.
Stablecoin maximalist. I haven't heard that before.
Heard it here first. No, I didn't invent it. But and so what that means is the asset that collateralizes the stablecoin is going to be very valuable too, through a sort of weird chicken and egg loop, though. And just like gold is very valuable because it's the largest, it's one of the largest stores in central banks, on balance sheets. The problem with Bitcoin and DeFi is that it's not programmable, so you can't have DeFi on Bitcoin. There's a few initiatives with sidechains.
I disagree, but go ahead.
Well,
we'll talk about it. Go ahead.
True today.
We'll talk. I disagree, but go ahead.
All right, sure. But today, it's it'd be so impossible to remake MakerDAO or Compound or something on Bitcoin natively. There's no trustless way to port Bitcoin onto the DeFi ecosystem. There's trusted ways to do it. There's wrapped Bitcoin, where some trusted entity, right? BitGo has one. Some other exchanges are thinking about doing one in the next few months. They basically just put Bitcoin on chain and they show proof of reserves and they issue like a synthetic Bitcoin that's backed, but just like Tether or something, really, or USDC, and they have like no traction at all. It's like a couple $1 million is in those assets. So clearly, I didn't like. A priori, I wasn't sure that would be the case. It seemed like, why would people use Tether? Why wouldn't they want to use a centralized wrapped Bitcoin? But this is the market's decided at this point. So we're waiting for a trustless Bitcoin. That's really, really hard. I've invested in a bunch of technology projects that will enable that, like Cosmos, and you have Polkadot interoperability chains. You have what Keep is doing, which is fantastic. But there's trade-offs. None of them are proven to be technically secure yet. They're costly, like they're not very capital efficient. You have to like lock up. I don't know what the latest is, but you have to sort of over collateralize and keep your with both Bitcoin and ETH. So that's kind of weird. Like, why would you want to, if you want to get a synthetic Bitcoin, that probably means you don't really want to hold ETH, but you have to hold both for security reasons anyway. There's a cost to that. So clearly today, that's sort of the ETH game, which is, can you be collateral for a financial system that is literally like 1,000 to 10,000 times bigger than the base financial system? Like, we know that from just looking at the ratio gold to derivative market cap or something like that. And that's ETH's big play.
So there's this framework that I had, and
great.
we will. I'll describe it for those that are just listening or watching at home. So basically, on the left side you have Bitcoin. On the right side you have Ethereum, right? And around both Bitcoin and Ethereum is the infrastructure for those ecosystems. And so the way I think about it is Bitcoin is sound money, right, in the principles that are around that. But all of the infrastructure historically has been centralized infrastructure. So this is when you see the Coinbases, the BlockFis, et cetera of the world, right? So kind of sound money surrounded by centralized infrastructure. When you go to the Ethereum side, what you get is decentralized infrastructure with an asset that is unproven to be sound money today, right? So kind of think of, I think the ideal world here is, how do we have sound money with decentralized infrastructure, right? And so you have these two different worlds. Each piece has a part of that like utopia, and we've got to bring them together. Now, that brings the debate of, do you bring Bitcoin to Ethereum, which you kind of just described with TBTC, et cetera, and these wrapped, et cetera, or can you actually bring decentralized infrastructure to Bitcoin, right? I can't yet announce the name of the company, but I'm sure you've actually seen the company. We invested in a business that is essentially going to bring the lending capabilities of DeFi to Bitcoin, right? There's other teams that are working on other aspects of it. Do you think that the obstacles today to having sound money in Bitcoin with truly decentralized infrastructure around it, are those technical challenges that can't be solved? Are those what I call time and attention, meaning that we haven't had enough teams working on them yet? It just hasn't for long enough to actually get these solutions? Or is there something else that has prevented us from having that kind of full stack integration with sound money and decentralized infrastructure?
Yeah, I mean, this is
like the $1 trillion question.
Look, this is also the thing that makes most maximalists very uncomfortable to talk about, which is Bitcoin has not innovated in a decade. And
is that a bad thing?
Depends what your perspective is. It's certainly a bad thing for developers and for app makers. Like, imagine if, developing in the 1980s was way harder than being a developer now. The languages were way more difficult to learn. They were like assembly code. The developer toolkit was way more difficult. It was so imaginably more difficult to create software and software products in the early days of the internet, when there was less tooling and libraries and so forth. And that's where we are with Bitcoin, and we haven't moved. So now, it's way easier to do it on Ethereum. It will always be continuously way easier, and in fact, the spread will probably increase. So you kind of have to yes, it's technically possible, I think, to do scalability and to create a pretty good, okay programming environment that can maybe do lending in Bitcoin. Maybe the project you backed is the one that's going to crack it. But ETH is flexible. It's moving, so it's always getting better and better. It's creating JavaScript when Bitcoin is still trying to get, I don't know, what's that old C Sharp.
But I think this is one of the key things, right? And this is where the Bitcoin crowd heavily disagrees with kind of the Ethereum crowd. I think the Bitcoin crowd would argue all of that development and speed and experimentation, etc., are actually flaws, not advantages, around one specific perspective. Money, you get one shot. And so on a spectrum between what I call sexy innovation, etc., and confidence level of sustainable store of value medium of exchange, on that spectrum, Bitcoin is as far to the confidence side as you can get. So it's very slow. It's very intentional. It's very much thinking through, we have $200 billion, give or take, in this asset. We can't fuck this up. All of the innovation, experimentation, etc., that's all great. But it can't happen at the expense of screwing up that core base unit of account. Mm-hmm. Now, I think Ethereum, what ends up happening is the speed, the innovation, etc., that crowd actually looks at that as an advantage, right? So they say, look, you've got to move, you've got to innovate, you got to do all this kind of stuff. They're optimizing for two different things. And I think what ends up happening is if you wanted to compare ETH as money to Bitcoin as money, right? I think most people would argue the Bitcoin argument in that specific perspective is probably much stronger than the ETH one. Mm-hmm. Now, when you go to the infrastructure side, the innovation, the sexiness, all the shiny stuff, etc., the speed, innovation, experimentation, all that is a much better way to look at infrastructure, right, than the actual base unit of account. And so that's where I actually think it makes sense to me, at least, and again, I'm hyper biased in all of this, that the developers would run into Ethereum where there was the possibility and empowerment to do all of that innovation around infrastructure, etc., leave Bitcoin to be built slow, methodically, intentionally, etc., how it's been built, and then eventually you'll see those developers migrate over and build that same infrastructure that they did all the testing and experimentation in Ethereum to build that around what ends up being the sound money. It's almost like the sound money is a magnet for the infrastructure, but all of the experimentation is empowered on Ethereum. Yeah. It just eventually, the things that work come to Bitcoin.
Yeah.
And I know all this is hyper controversial. People will literally be freaking out that saying I'm an idiot, etc.
Well,
that's just my perspective.
I mean, these are complex systems, and we're sort of you've made 6 assumptions. that we just don't know. It'll take a few years to figure out, like technical risk, what. But yeah, look, I think it's possible, but clearly today, the other story, let alone Bitcoin, DeFi hasn't moved to any other ecosystem. It hasn't moved to EOS. It hasn't moved to Tezos or Algorand or anything like that. ETH is just controlling the narrative and controlling the, like almost every good DeFi project we back, good team, or even team that we look at is building on Ethereum. It'd be sort of nonsensical to not at this point in time from a business perspective. So you have network effects there. So you have to think, are the network effects and developer community and so forth strong enough that you can sort of bootstrap ETH into a stable store of value? Stable is a rough word in all of crypto.
So you're talking about almost like inversing it, whereas the Bitcoin argument would be you start with sound money, then you build all the infrastructure, the derivatives, other layers,
but you start with sound money, but your infrastructure is always going to be significantly worse. I mean, at least 10 years behind, maybe more.
But
today it's 10 years behind, or 5, I guess.
No,
since DeFi is sort of 5 years old.
Hold on, though. Here's the difference, though. The infrastructure around Bitcoin is 1,000 times minimum more popular and more robust than ETH. The difference is that the ETH infrastructure is decentralized. Like, if you compare decentralized infrastructure on ETH to decentralized infrastructure on Bitcoin, you're correct. If you compare just infrastructure, Bitcoin has a head start and won't get caught, right? Because all of the Ethereum infrastructure, the Ethereum specific infrastructure, is specifically going after this decentralized opportunity. But like Coinbase is originally Bitcoin infrastructure, right? BitGo is Bitcoin infrastructure.
But,
right?
But by the way, they've been co-opted by,
they expand. Yeah, absolutely, they expand.
The purest, the Bitcoin only, the ecosystem you're talking about, exchanges, custodians, market infrastructure, on-off ramps. There's almost none of those that are just for Bitcoin yet. Now, Bitcoin has much more liquidity, of course, much more pairs. But actually, ETH is doing a pretty good job. Even XRP
they're not at zero.
Doing a pretty good job.
I'm not a maximalist in the sense of like, there's one.
Like Zappo and the original companies that were only Bitcoin, they've lost in the market. Coinbase got a lot of flack for when it launched a bunch of additional coins, but they're the market leader and they're the monopolist at this point. That's the way to do it. So actually, a lot of that infrastructure is there. Obviously, more infrastructure is there for Bitcoin, of course. But my point is that you need to be decentralized, right? Because if you just because you have a decentralized store of value doesn't mean, like, if you then give it to a lender or whatever, if you then lend it out in a centralized way, you lose 95% of the benefits of it. You lose you lose a lot of the privacy, you lose a lot of the censorship resistance, and that's important. I think that's important up the stack, just like it is at the base.
So, from a theoretical perspective, I agree with you.
Yeah.
Right. There's 2 points that come into play now. Do we go from a centralized infrastructure around Bitcoin, and those companies can decentralize over time? Maybe. I don't think we know that answer yet, right? And there's plenty of people who will pontificate on whether that's true or not. The bigger thing, though, is how much of the DeFi infrastructure do you actually think is decentralized?
Yeah, it's a good question.
I don't know the answer, and I actually don't even know if the answer is bad answer for the DeFi community. I just how do you even figure that out?
Yeah.
Right? Because it can't be 100%, but it's also not 0%.
Yeah, absolutely not. No, it needs to become more decentralized. There's a lot of sort of governance decentralization infrastructure that has to happen on the Ethereum community in DeFi right now. Like, how do you make a DAO, decentralized autonomous organization, work at scale? How do you make oracles work in a decentralized way? That's very difficult. Yeah. Those are big challenges. They're technical risks.
Like something like a DAO, to me, if you can make it work in a secure, predictable way that people have confidence in, it would be massive. It would be incredible.
Mm-hmm.
It's just, we got a lot of work to do to get there. And I think that you're saying the same thing, right? Of just like, this stuff is really, really hard.
Totally.
It's not going to happen overnight. And so that's why we need as many people working on it as we possibly can.
Totally. But I do think there is benefits to centralization at the beginning. Significant. And
okay,
I think
explain that.
So you're building complex software. And the more complex it is, the more you need, like, a corporation is the most authoritarian and centralized. Democracy or like a republic form of government for a corporation would be nonsensical. Like, you need to have an authoritarian top-down structure that's at least somewhat hierarchical. Silicon Valley is less hierarchical, whatever, but it needs to be pretty hierarchical in order to ship fast and have secure code and respond to customer demands and so forth. So I think, we've seen this trend where most of the DeFi projects, they start pretty centralized, and they're equity investments, and they have corporations or foundations that have sort of hierarchical. They build software the way that Microsoft builds software, and that's good because Microsoft builds good software. But over time, they will decentralize. So Compound actually just released its token, or announced it released its token a few weeks ago. It's just to existing shareholders like us. Compound is the second biggest or so. It's one of the biggest decentralized finance projects. It's basically a money market on Ethereum. It's actually one of the most sophisticated, probably working dApps today. And they just released a token. And so they're moving gradually towards decentralization. I think that's great. I mean, there might be a period where the company dissolves. There might be a period where the CEO is no longer involved with it. I think that's possible. It's hard, of course, but this is a community of decentralization. And like all things most things start centralized and decentralized over time. Like Satoshi was very centralized at the beginning, of course. And then, even I look at George Washington. You have to have a moment where George Washington leaves and sort of like gives it up to other people. But it's fine if it takes 8 years to get there, right? Actually, that's probably the golden number. If you look historically of like how democracies form, which is a form of political decentralization, usually you have a ruler that rules for like 10, 20 years, sometimes less. Like George Washington, the first one is this guy Solon of Athens. We don't have to talk about that. They all like institute democracies, then they rule for 10 years to make sure things go okay, and complex systems get adapted and institutionalized. Then they peace, they leave, they travel the world, they go anonymous like Satoshi. I think that's probably a good model. It's like a 4,000-year-old model of decentralization. It probably applies here.
I've never heard anyone describe it that way. I love that.
Yeah.
What are other areas that you guys are excited about and looking for investments and think are going to be big over the next kind of 3 to 5 years?
I think outside of DeFi, which is it's kind of cool now. We were in it before it was cool. We've been doing it for 5 years. It's great that like there's when you see like people on LinkedIn have in their bios like DeFi influencer or like, then it's kind of like it's like, okay, this is a thing now, which is starting to happen. But it doesn't matter. It's still very early, I think, when you think about the market size of like store value and so forth. Other things, we love looking at the Asia centralized infrastructure. Mm-hmm. I think that's fascinating too. You touched on this point of actually maybe the centralized infrastructure can become decentralized. You're seeing amazing business model innovation around that happening in like greater China, Asia, with, for instance, the things Binance is doing with Binance Chain, Binance Dex, Binance Token. Now, though, the other big exchanges like OK and Huobi also have their tokens and their chains as well. That is very cool. That you're starting from the most centralized thing. I mean, an exchange, it's a company, right? It's the most centralized thing possible in the crypto ecosystem, and they're trying to decentralize over time, and that is a very cool I think it'll take years and years, but watching that happen is fantastic sort of application level innovation. And the coolest, a lot of what we do here is very infrastructure, mm-hmm. but this is the coolest like application level infrastructure or application level innovation happening in crypto right now.
How have you historically split dollars between Asia and non-Asia, and then will those percentages change, you think, over the next couple of years?
Yeah, the way we think about it is less Asia versus non-Asia. We think crypto is global. Global from day one, global user base. The big trend is the best technology, sort of tech infrastructure, is in the West by far. And then the best business model innovation, the best centralized infrastructure, at least by fastest growing, and I think sort of qualitative factors like most innovative designs and so forth. The best business model innovation is in the East. This is broadly true outside of crypto too, by the way. All the AI and sort of like semiconductors and low-level technology, they're all happening in the U.S. There's a push for that to change, of course. A lot of Chinese dollars going towards changing that, but they almost all start in the U.S. or like Israel, other like sort of very tech hubs. But the best business model innovation happens in Asia. Like WeChat is vastly superior as a messaging and sort of social media and like all-purpose app than the American apps. It just blows it out of the water. And so yeah, and even like you even see this in other like in the O2O industry, marketplace businesses. Uber and Lyft, they still have not figured out unit economics. They lose billions of dollars. The only profitable at scale marketplace business. This is like a $250 billion. It's the size of crypto, industry, is Meituan, which is like an $80 billion company, and they're very profitable. They're sort of do food sharing and ride sharing in Asia. So it just blows it away. Anyway, so I got a little diverted, but generally that's kind of how we think about it. Like almost all of our venture investments at this point are in Asia, backing these sort of centralized companies, and most of our technology investments and core protocols are in the West.
Yeah, it's fascinating to kind of hear you break down not by geography, but also by what type of investment per geography.
Mm-hmm.
What is an area that you think people are excited about right now that they are actually shouldn't be, or they're missing the boat? Like there's something that's driving attention, capital, excitement, but maybe isn't as there's not as much meat there as people want there to be.
Yeah, the big thing, I don't know how popular this is anymore, but I know you liked it a lot, so I'm going to say it, is security tokens.
Mm-hmm.
I think are sort of missed the mark. I think we're sort of starting to see that. I'm curious what you think, but the idea of tokenizing everything is something that I actually do agree with. I think synthetic assets will be, like I said, the biggest impact of crypto over the next decade, the next group of crypto users will be people that are using it to get access to the dollar. So that is a synthetic asset, stablecoins. But I think security tokens, doing it in a centralized way, doing it for real estate and even for dollars. I mean, stablecoins is there's security tokens which are centralized and they're fully backed reserves and they're centralized custody, and then there's decentralized stablecoins like DAI. And I think the latter group will blow the former group out. And so, yeah, does that count? That's my big. I'm pretty negative on security tokens.
I would argue that some forms of security tokens are bigger than all of DeFi combined already. So like, take Figure, right, which company that we've invested a bunch of capital on the
Mm-hmm.
board of. They've done over $1 billion in digital HELOCs.
What is HELOCs?
A home equity line of credit.
Okay. Oh yeah.
Then they've moved into student loan refinancing, mortgage refinancing, etc. They don't use the name security tokens, right? They don't talk about blockchain this or blockchain that often.
Mm-hmm.
But what they've essentially done is they've digitized or tokenized a mortgage,
Mm-hmm.
right? And then in order to transact those assets with other parties on Wall Street, they had to basically rebuild the settlement layer, right? So DTCC settles traditional assets in kind of legacy world. They rebuilt DTCC on a blockchain they call it provenance. And now they take these digitized or tokenized assets and they sell them through this new blockchain-based settlement system. They've actually done more HELOCs than all the value locked in DeFi today,
Mm-hmm.
right? So here's the difference. I agree with you on the people who run around and kind of pound the table and say, like, we're a security token company. That's going to be really hard business, right? Doesn't mean that they can't be successful, but it's just going to be really hard business. The people who instead say, I'm going to help you buy the same asset from the same counterparty in a digital format, much easier business and much more likely to be successful. And so where I've come out on this is I believe that every asset, every stock, bond, currency, commodity will be digitized in the future or tokenized. The difference is, one, it's not going to happen overnight, obviously, but two is we're not going to talk about them as tokens like crypto tokens, etc., because the social ramifications of doing that in conversation with the legacy world, they're like repealed, right? They just like they just shudder the second that they hear tokens. Mm-hmm. If you go to a Wall Street bank, etc. Mm-hmm. So instead, now what you're seeing is people just describe them as something else, digital HELOCs, digital mortgages, etc. And that's actually really, really big and getting bigger. And so to me, like, that's where we end up. But it's the same end game of every stock, bond, currency, and commodities digitized. Your point about stablecoin is just the digitization or tokenization of cash, right, is a good example. And I think we're going to see that across real estate and everything else.
Yeah, I think we should step back a little bit and say, what are blockchains useful in the early days? And I think there's some uses where generally this reminded me, I would also add the entire category of enterprise blockchain are things that totally overhyped, and don't make any sense for the next 10 years or so.
Yep.
And the reason I say this is because generally with new technologies, they're not very scalable. I mean, crypto is where it's like pre-DSL, pre-modem era levels of scalability. So they're not very scalable. They don't work very well. They're not very secure. And so generally, they work best when they enable new use cases as opposed to when they enable operational efficiencies. Like you look, just yesterday, Atrium went, closed up. Atrium they raised $75 million from all the best VCs and their thesis was, let's use software to make a law firm much more efficient.
Tech first law firm.
Yeah. And he said that was a bad idea. Turns out, actually, even where 30 years after software revolution started, we're still not at the point where a tech first law firm is unlocks that much more operational efficiencies than just a normal law firm that has a bunch of old people that are using 20-year-old Microsoft Word or whatever. So that's 30 years in, right? So I think the idea that
But let me just clarify one thing. Those law firms only exist still today because they do use technology. They do use that software. Now, they may not do it in the Silicon Valley, hyper cutting edge way, but they still use computers. They still use all sorts of different software. They still have SaaS licenses of different technologies, etc. So it's not that it's binary, they don't use technology. They do use technology. I agree with you that it's not what you and I would consider the latest and greatest technology, but they might be 10 years behind, 5 years behind in technology.
I don't know. I would guess the 0 to 1 wasn't that important either. I mean, when do you hear
none of them exist though?
No,
the ones who didn't make the leap don't exist.
Eventually. But did you hear stories about in the 90s or 80s all these law firms that just refused to adapt to tech, that refused to buy computers going out of business? The ones
services businesses are a little bit different than kind of
maybe
other businesses.
I mean, it's an extremity to prove a point,
Yep.
But still, 30 years, long time. So I think that the operational benefits to using blockchain as sort of to smooth back office solutions and so forth are just so minute. I think they might be negative, actually, depending on regulatory compliance. Some people tell me that, you would know more because I don't invest in this category, but that actually custodying tokenized assets sometimes is more expensive because there's this regulatory uncertainty and ambiguity, and so you have to cover.
We've haven't invested there. Yes, I agree with you.
So in some ways it's actually worse, and even if it's 1 or 2% better, which I think is probably the best case scenario, I'm willing to bet. I don't know much about Figure's business. I'm willing to bet that the fact that they're doing so well probably has more to do with the fact that they have a rock star founder who's a legend in his industry and has created an amazing team, whether or not they were really using that much blockchain technology. There's a little bit of confounding of variables here.
So the only thing that I will say is...
And by the way, the other comparison would be do you think companies that had intranets in the 90s, that's probably the closest comp, actually, more than this law firm. Did the first companies that developed intranets, did they do significantly better than the companies that didn't have intranets? I don't think so. I mean, most companies don't even use intranets today.
Yeah, the place where we've come out on this is Figure and Provenance is a perfect example. If a company wants to use the blockchain internally to do the operational efficiency stuff of their own operations, not very exciting. I agree with you there. Where we see the application being super valuable, and this is what Figure's doing, is they've built a blockchain that is going to replace the infrastructure of a marketplace. So it's a bunch of people in an industry all have to go to one location to trade. So for them, take HELOCs, for example, kind of asset-backed securities, et cetera, 2 to 3 day transaction time, settlement times, right? You get high cost. And then the rating agencies. A lot of people don't realize the rating agencies are overly conservative because they have latency of information. They only get reports every 30, 60, 90 days. So when Provenance steps in and all of a sudden says, hey, look, you can transact here, same assets, same counterparties, but it's just in a digital format, same day settlement. If you think about it as a counterparty on that trade, my capital is actually at risk for a shorter period of time. Right, I can drive some cost efficiency, which again happens, but isn't the sexy part of it. And then even if you look at the rating agencies, all of a sudden they start saying, wait a minute, we have better access to information, therefore we can more accurately rate these securities, and therefore it is likely that we'll get an actual increase in rating, not because we're changing the rating rubric, but it's just that we have better access to information. Now, those marketplaces, asset-backed securities, for example, DTCC last year did $2 quadrillion worth of trades. Which fucking, I don't even know how to write that number, right? It's just an incredible number.
If only they had the fees of Coinbase. Taking 2% on each trade.
Exactly.
And you're going to have a $1 trillion business.
The reason why I talk about this is if somebody was like, hey, I'm going to use the blockchain internally or just with one other customer, et cetera, I agree with you. Like the operational efficiencies there don't matter. Where it does become interesting, at least to me, is when you say, here's probably one of the largest markets in the world. We're going to replace the market infrastructure with a better way of doing that. It all goes back to this theory that I have. So the whole value chain of what's going to get created here goes back to one single innovation that no one ever talks about in the space, which is triple entry accounting. So if you go back to 1400s, right, double entry accounting gets created, and there's a whole wild story about how that happened, where literally Leonardo da Vinci is responsible for like driving the adoption of double entry accounting, simply because he was friends with the Medicis. But in 1989, triple entry accounting is invented by this Japanese researcher. Then you end up getting 2005. Somebody writes a white paper about how do we do triple entry accounting with digital receipts in a cryptographic way. And
Sorry, what year was that?
2005.
Took a while. Okay.
So 1989 to 2005. Yeah. But again, nobody really cared about 1989, the original white paper around this, or the second one, 2005, because they're all academic, theoretical. What the hell is triple entry accounting, etc. 2009 comes around, Satoshi Nakamoto releases a white paper, but also releases an application of triple entry accounting, right? And all of a sudden, what happens is we get Bitcoin grows into this, $150, $200 billion asset. If you take triple entry accounting and you look at how are we going to apply that to every single financial service, I think that will create more value than anything else. And what you're talking about around decentralized finance, that's what it is. It's taking triple entry accounting and it's providing connectivity to balance sheets, assets, etc. The same way that the internet connected humans and devices so that we could communicate. Now you're just applying that to value, financial assets, etc. The day that I realized that framework, it completely changed the way that I looked at a lot of this stuff. And it really came down to forget quote unquote blockchain. Where is an automated application of triple entry accounting going to create value? Because ultimately that's what a blockchain is, right? It's just an automated version of triple entry accounting. And to me, that's super, super exciting and very, very disruptive, but we're not going to understand that for a long time. Like it's going to be one of those things, 20 years from now, people are like, oh, that triple entry accounting thing was really important, right?
Yeah.
You're thinking possible. Really hard.
No, I I think it's possible that's the case. I generally like, this is taking our investor hat on for a moment. I mean, there's important things outside of what makes us money. But generally when you have a new technology, there's it comes in, this is Chris Dixon talked about this from Andreessen recently. There's strong forms and there's weak forms of technology. And internet was a classic case. Strong form was the internet. Intranet was the weak form. Similar enabling technology, like similar protocols, that went underneath both of them. One was totally global and open. One was just for corporations and for productivity gains. And, there's probably some pretty good intranet companies. They do fine. But they're a little more incremental. They're quite a bit more incremental. And I think that's the case with a lot of this stuff in security token, enterprise blockchain land. It's disconcerting to me that I started in crypto in 2014. And, that was when Goldman and Citi and all these banks, NASDAQ, were getting started with these programs. So it's like, why is it taking 5 years for them to develop and to show many significant gains? My thinking is just also, as well as a strong and weak form framework, it's also a question of timing. Like, there will be more operational efficiencies of blockchains as the technology matures. And there will be more enterprise use cases over the next few decades. But I think we're still super, super early, So for me, I like looking at we try to chase super unicorns. We try to think the thing that will be $1 trillion protocols, $100 billion companies. And that's what we're seeing in this sort of the crypto native financial system is spawning those.
Do you think that there's a world where regulators ever allow, let's say equities, for example, to trade on an open, permissionless, decentralized protocol where they have no ability to step in?
I don't think they really have a choice if the DeFi movement keeps going. I mean, the next thing will be synthetic assets.
Well, they absolutely can, right? Because they can just tell the companies you can't list your asset there.
On DEXs, though, I mean, DEXs are just code. The founders might leave. So, the technology behind MakerDAO is fairly trivial to add S&P 500, over collateralized by ETH, etc. The same escrow system, collateralization system, smart contracts, oracles that support creating a stable US dollar allows you to create a stable Tesla stock, Apple stock, and give that to the entire world. There's many people around the world that just cannot access those stock. They can't access them on leverage either, of course, but they just can't buy Tesla stock for various capital control or unbanked reasons.
Yeah, but the point being that those people who are doing that, they have to go buy the Apple stock, right?
Well, they'll buy a synthetic. No, I mean they buy synthetic Apple stock.
No. Whoever's creating that, though, somebody has to get the Apple stock to put under as the collateral.
It could be cash settled, so to speak.
Explain that.
Like you could have an oracle that tracks the price of Apple stock, and as long as you have like 150% of the value of Ethereum of that Apple, locked up, then that's like a cash settled derivatives contract, physically settled one, right? So you have they're truly synthetic assets, right? That's
so you're basically saying you're seeing a world where you don't even have to go buy the Apple stock. It's just like a price tracker.
Yeah, one person is locking up a sufficient amount of Ethereum or Bitcoin worth of Apple stock, and that simulate Apple. It's just the price, right? As long as the price is very obvious and clear, and there's an oracle that can track it, you're good to go. Now, there are some, like, if you really want to be market neutral, you need a market maker who sort of hedges their Apple stock.
Do you actually want to own the asset or just have price exposure?
Yeah, because someone
has
to be short if someone's long, so maybe you have to access Apple. But that's great. That's like what the internet is. That's what the internet is all about. Like some people that have access, allowing it to people that don't have access. One thing that's sort of surprising about the internet is if you look like on a market cap and revenue perspective, the greatest benefit from a consumer surplus is basically, it used to be that if you were a upper middle class New Yorker, you had access to all this stuff that you could buy, and the rest of the world didn't. And the internet allows anyone around the world to have access to the same stuff, but not for the financial system, right? Mm-hmm. If you're here, if you're a New York-based hedge fund, or you have a brokerage account, you have access to all these sophisticated financial products that most of the rest of the world doesn't have. And once that's unlocked, I think the sky is the limit.
Where can people go find out more if they want to learn about this stuff? Where do you suggest they go read, whether it's books, blogs, information sources, etc.?
Yeah, I like the old histories of how the financial system developed. Or, they're not going to talk about Bitcoin. The writers are sometimes dead or they're old professors. But they're fascinating to get this sort of 4,000-year history and then sort of compare and contrast. So Graeber's book called Debt, The First 5,000 Years, it's like a classic. It's the book that most of the early, like Wences and most of the early sort of crypto influencers who got everyone else into it read and got them into it. Same with me. There's a book called Money Changes Everything, which is by this Yale professor, which is great. For the modern day stuff, we have a Dragonfly has Dragonfly Research. It's our Medium page where we blog and write articles about a lot of this stuff. That'd be a great resource. It's a little techy, but we have some stuff that's more general.
Dragonfly Research on Medium?
Yeah.
All right. Before we wrap up, most important book you've ever read?
I studied social theory in college. No finance or anything like that, or CS, and I loved like just sort of the early canon, like Foucault, like the works of Foucault. It's like this postmodernist French philosopher. Very profound impact on me. It makes me think. He has all sorts of politics, but the most important sort of impact of what he says is like you need to question institutions very closely. And sort of layers of trust are everywhere, like implicit trust in like the psychology, like in academics and credentials and in the media and of course in the government, but we all know that. But there's like layers of trust in institutions everywhere, and it's sort of how the system works, and it's how the system fails.
Aliens, believer, non-believer?
Yeah, I studied up on this one. I think obviously, how many no's do you get? Like
I've gotten just 2 or 3. The all-time is still Josh. I'm bringing Josh Brown actually back. We're gonna figure this out because he claims that ghosts are more real than aliens. which just I was like, that you're just going for the hot take.
Love the science behind that one. But law of large numbers. My biggest thing, I used to be very, like, I love sci-fi, love E.T. I used to be very, like, hell yeah, we're going to see some aliens. It's going to be cool. New adventure for mankind, Star Trek. Now, I recently read The Three-Body Problem. This 3-part huge science fiction novel. It's like the most famous one in China. And it is a much darker take on aliens. Have you read it?
I have not.
If you're
the second person to tell me this, I got to go read it.
Wow, only number 2. It's basically it's sort of this logical. It does a thought exercise of what happens if we actually contact aliens, and in fact, the most likely outcome is these aliens will kill us, because they have significantly greater technology than we do. So they'll view us like ants or people on a farm, and probably they'll be super predators just like us.
Spray some water. Just spray some water on the ants, right?
Yeah. Or
wash them away.
Put a few in a zoo, whatever. Or the second problem, and this is actually the real, like, you never know. They might be nice. They might be not nice. Flip the coin. The real problem, though, is sort of like, it's called dark forest theory, which is that they won't know much about us, and it's possible that, like, their rate of technology will grow less fast. Slower than ours. Like, you never know. There's periods in time where our tech develop, like millions of years, where we develop faster and slower in sort of race to being able to, like, I don't know, kill other species, right? So they just can't take the risk that even if we're, like, weaker than them, that we'll become stronger than them over time. And yeah, it's a great game theory application of aliens, and it makes me feel very sad now, because I think if we do encounter aliens, it will probably be very bad. But yeah, they've got to be there somewhere.
I generally agree that if we come in contact in a material way, we probably have a much more positive view of them than we should.
Yeah. Judging at least from humans, we have a pretty bad track record.
What's the one question you got for me to finish up?
Oh, I didn't prep a question.
I know.
I don't know.
That's even better.
How's it going? Are you
no.
Is coronavirus hitting you yet in New York?
You gotta have a real question.
That's my big thing. My half my team was in China. They've been quarantined the last month or two.
What is that like?
Nothing has happened like this in all of history. Basically 1 billion people or more are quarantined. And what it means to be quarantined is you can't leave your house. There's a intricate system of government oversight where there's basically, like, neighborhood watches in most Chinese cities, and the neighborhood watches are empowered. They give you, like, a hall pass. You get 1 hall pass per family per day, and that's it. You get, like, an hour period where you can leave your house to go buy groceries. It's I mean, there's situations where, like, a husband and wife, the husband chokes, on something, has just or breaks their leg, and how they have to go ask their neighbor to. Oh, what do we?
Joe's pulled up a meme of the different plagues, and it's plague from 1720, 1820, 1920, 2020, coronavirus.
yeah, the corona plague. So it's it amazes me actually how little people are paying attention to it in the U.S. because China is our number one trade partner, whatever. It's one of our largest trade partners. Even the place where it started in Wuhan, there's study abroad programs there. It's like it's a manufacturing hub of the world. So it's very, very weird times there, and it doesn't seem to be affecting New York yet though.
The joke that I heard is Polina, one of her friends, was texting her, and she's going on an international trip, and Polina's like, "Are you going to wear a mask on the flight?" And she said, quote, "I'm going to free face it." And when Polina asked her why, she said, "I ride the J train every day. What are you talking about? There's all kinds of weird shit down there." And I think that's while she was saying
that's
it in
more
jest,
of an indictment about the J train though than
for sure.
But you're right. It's very rational actually for people to not take the subway as much, undoubtedly, or to take Ubers less, or not to go to. I don't know why people are still going to sports games and massive crowd. That's the other thing. The first thing that happened in China. I mean, now people are in their homes, but the first thing is no public events, all concerts, all, like, restaurants even are closed throughout China. China, you could say what you want about them. They're pretty rational,
And do you feel like that's where we're going to get to in the U.S.?
Yeah, certainly. I mean, at least, I don't know about quarantines, You never know. It's it was unprecedented in China too. That's never happened in a modern country before. But I tell my girlfriend and my employees and my family, don't go to a major sporting event. Don't go to I mean, the odds. It's very hard to account for exponential growth and viral growth in the human head. It's very non-humanist. So, for instance, you can have a couple hundred cases in an entire state, and that means that if there's an event over 10,000 people, the odds are there's going to be at least one person with the virus there. And these things also are not linear. One person often can infect 70, 200, 200 people, right?
Yeah. Do we know if you get it and you don't die after like 2 or 3 weeks, are you then like immune to it in the sense of you're kind of a carrier, but you're not contagious anymore, and also you're going to be fine?
Probably, I think.
I would think, but I don't know for sure.
But well, here's the issues, which is any virus like this mutates very often. Actually, there are some cases where they test you and your symptoms have gone away and then it reoccurs.
Okay.
I think there's some debate between whether you actually caught it again or it was just the sort of pattern of the virus is such that it ebbs and flows. It's hard to say. The thing is, the most likely outcome is this will be just there's 4 or 5 strains of flu every year that we get vaccinated for. And they just reoccur every year or two, because so frequently. So
this will just be another strain.
Yeah, I mean, you can get the flu
5.
2 years in a row, even if you get the vaccine, right? Because of how quickly they mutate. It's unlikely. Like, it's more likely that it'll take a few years. But if that's the case, if we're not able to eliminate it, then every few years maybe. Which, brave new world.
It's fucking crazy, man.
Yeah.
All right. Well, where can people find you on the internet?
I'm on Twitter. It's I actually always have to look this up. It's like Alpaca, Alpackap, like a llama, or like alpaca. But really, you should Dragonfly Research and Dragonfly Capital. If you go, it's like dcp.capital is our website, and we have a Medium page. That's where most of my more thought-provoking comments are, as opposed to on Twitter. I'm not as Twitter native as you are, unfortunately.
I love Twitter just because I just let it flow, man. Whatever ideas I got, you're gonna know what I'm thinking because I'm posting them.
The post-Trump world. Yeah. Let it go.
And part of it is it's a filter, right? Like there's people who I've followed for years, and I know whether I agree with them or not, whether I like their thought process or not, etc. And I think that people just enjoy the authenticity of it versus if I was more of a person that just like, hey, I'm going to write one blog post a month, I would never write. I just would procrastinate, right? So instead it's like, hey, I'm going to tweet every day. I'm going to write morning a letter, blah, blah, like, and it's just that repetition and consistency actually forces me to do it versus the opposite, which would just be like, I'll get to it tomorrow. I'll get to it the next day.
Totally.
Then next thing you know, it's 6 months later and you haven't done anything.
And from the other perspective, just more me, like the information junkie perspective, we're in the venture industry. We love being on top of new things. Twitter, a lot of misinformation, obviously. We don't need to talk about that, of course, fake news and so forth. But the other fascinating thing about Twitter is like the citizen journalism aspect of it, because there's this like framework, Balaji talks about it, and he's big on coronavirus. He's killing it right now he's a VC, but he started a biotech company and he's a PhD as well. And he's just been going on about coronavirus lately. And, there's this concept of there's like there always has to be pre-news and post-news, because that's where journalists get it from somewhere, right? And they find sources, and that's their specialty. But now sources are online, and it's journalists in theory are better at finding and evaluating sources.
They're trained and they can tell the story by stitching them together, etc.
Yep. But there's a delay. Clearly, coronavirus was probably weeks delayed for how long it took the media to figure it out, for government reasons, all sorts of reasons. How many people does the New York Times or CNN have in Wuhan, right? So you get to sort of
well, now probably a ton.
Those are some brave journalists. Yeah, going into a quarantine where the entire healthcare industry has collapsed. I'm sure they're gunning for Pulitzers. I don't mean that in a negative way. I hope they get it.
I know a Bloomberg reporter who moved to Beijing. I don't know, maybe a year and a half ago, maybe even 2 years ago. I don't know, but like relatively recently. And I've seen her post a bunch online about like life in Beijing with the coronavirus, and I'm just like, holy shit! Like, what, do you leave? Do you stay? I mean, there's just, what do you do, right?
Yep.
So it's pretty interesting.
A lot of tough choices.
All right, man. Thank you so much for coming to do this. This is
Thank
awesome.
you.
We're gonna have to do this again, and we'll see how all these different narratives play out. But I appreciate you just being thoughtful and taking time to share it with us.